Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny from The Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thanks for having me again. Never a dull day anymore in the silver market, that's for sure.
Definitely, it's been a wild ride over the last month. Ever since we made new all-time highs for silver, it seems like everyone has been waiting for this for so long. It made it kind of went right back up to those highs. It seemed like, I believe, Wednesday early morning in the Asian market trading. Your perspective on that $54 level, where we are right now? We've sold off significantly below 51, now bouncing back. But where are we at the moment for silver?
Yeah, things are looking very good here. So, coming into this week, I was cautious. And, you know, I don't want to be the guy who sounds like I'm always bearish on silver. I mean, I'm as long as you could possibly be. I think we're going well into triple digit silver. So, I just want to put that out there. I am not like some kind of silver bear. I'm long, strong, think we're going to triple digits. But I do like to be the person who I look at things through both lenses. You always have to be aware of what are the caution signals. And I went into this week thinking it was possible we saw an ABC pattern, and that would have indicated the possibility of lower lows. Well, I think the likelihood that 45.50 is now the low, that was the low from a couple weeks ago. I think there's a better chance now that that is the low, and it's looking likely that we'll remain range bound between 45.50 and then the top end where we poked briefly above $54 this week. I think that's probably the most likely scenario. But I do want to say too, I focus on forecasts and I do make predictions. However, more important than predictions is having a strategy. You want to have a personalized strategy that will help you to be prosperous in a variety of different outcomes. Especially newer investors, but really all of us, we tend to gravitate towards who's going to be able to predict what's going to happen next week. Here's kind of letting the cat out of the bag. Nobody knows. Nobody knows what's going to happen next week. We deal in probabilities, not predictions. So technical analysis, just like we were talking about before the show, can give you an edge. It can give you a statistical edge. And if you're good at it, maybe your or forecasts are good about 60% of the time, which is pretty darn good. But that means 40% of the time you're going to be wrong. So it's important to have a strategy that allows you to be profitable regardless of how the future unfolds. And I think that's really what we focus on. However, it's fun to make forecasts as well.
And it is fun to look at the charts as well. If you could maybe share with us what you're seeing on the silver chart right now. I think as we see prices kind of going wild here, yeah, just to stress again your perspective of it's good to have a strategy that you stick to ahead of time, so you're not making just decisions on a whim as we're seeing wild price action.
Yeah, for sure. And just to give perspective on, I think it's important to know like where I'm coming from, the person who's kind of giving their viewpoint is, I've got physical metal that I'm not touching. So when I talk about like, hey, taking profits, for me, I've got the majority in physical metal, not touching that for a very long time. In fact, most of it's going to be a generational insurance policy against these out of control central planners, my kids and then their children's children. And then I've got some core long-term holdings that I'm just not touching either. I intend to hold those through the volatility for the duration of the bull market. And then I've got a separate account where I give myself permission to try and get kind of cute and trim near the intermediate peaks and scale back in. And that's worked out very well. But there could come a day where in that specific account where we get overbought, we're against resistance, all the caution signals are there, I take profits and it keeps going. And that's okay because that's just a portion of my overall holdings. So that's kind of the perspective of what I'm looking at when I make these short-term forecasts. But I've been highlighting this particular chart here. This is the monthly log scale chart for silver. And this is a bearish rising wedge pattern. Now, you hear the word bearish and you think, oh, that doesn't sound good. Well, that gives an ultimate target up here near 75 before a meaningful correction. I mean, that's if you go all the way to the apex on this pattern. And we've been testing this resistance line here. And these are monthly candlesticks. So you can see right here, if you can, I'll zoom in a little bit. On this month here for November, we're above this resistance. So a close above this resistance line, above 50, and then above the all-time high of 53.77 would invalidate that pattern and indicate we're likely headed much higher. But those are the three key levels to get through before the next move higher in silver. I think it's reasonable to expect a period of consolidation before we just go ripping higher again. So the big levels are one, this red trim profits line that I labeled, and then about $50. That's just key psychological, resistance. Everyone and their brother knows $50 silver is a battleground. And then you've got the all-time high. And I labeled this one 53.77. And like you said, we punched above that earlier this week and got up to actually 54.41. So I should change that. I won't do it now, but 54.41 is the number there. So now that's kind of like the caution signal a little bit. So now let's take a look at the good news. So here's the good news. And I think this is very likely to come to fruition. And ultimately, I think we're headed much higher. Many people have seen a chart like this on X, and this is a fun chart to look at. So this is the monthly log scale chart for the futures price of silver. And what a pretty cup and handle pattern. This is like the mother of all cup and handle patterns. This chart goes back to 1980. And you can just see this clear resistance at 50. Once we punch through 50 and close the month above 54.47, that's the all-time high in the spot price. Well, the next measured move target is $96 silver. And ultimately, I think we're going higher than that. But I think 96, after we punch through this, could come faster than most people think. Now that, what's the key that unlocks that move up to $96 silver? Well, it's breaking above 54.47, this all-time high. And it could take a little bit of time. I mean, you see this RSI up here, extreme overbought. You can only, going back 40, 50 years, there's only been one other time we've been this high in the RSI, and that signaled the major peak in 1980. Not saying this is a major peak at all. Like if you just looked at RSI alone, you could say, hey, maybe this is a major peak here. But when you look at a confluence of other charts and indicators, everything indicates this is not some kind of major peak. So number one, like the gold silver ratio at major peaks, you would expect that to, peak around, 15 to 1 in 1980, 30 to 1 gold silver ratio in 2011. And then in 2020 at that intermediate peak during COVID, 60 to 1. So we're up over 80 to 1 on the gold silver ratio. That is not how bull markets end. Also, at the end of a bull market, you see the most speculative components leading the way. So if you look at like an SILJ, Junior Silver Miners ETF ratio against like GDX, yeah, it's been leading, but it's just beginning to break out. At the very end of a bull market, you see the most junior speculative components just way up here leading, going way just kind of parabolic. We're not seeing that kind of behavior yet. So that's a lot of words to say. I think most likely scenario, consolidation here. I don't think we're ready to just punch right through and rip higher. Period of consolidation. Sharp dips, from my perspective, are for buying. And then once we break through that 54, which could be like early 2026, mid 2026, it's off to the races. 96 becomes the next target.
Now, we do have a viewer asking here about kind of adjusting the charts for inflation and how that works for technical analysis. They're wondering, why
Yeah.
why aren't we adjusting the 1980 price for inflation,
Yep.
so that it's much higher, and maybe that cup and handle wouldn't look
Yep.
exactly the same. Does inflation really impact the charts for technical analysis at all?
It does and it doesn't. That's a really good question. And I wonder if he saw a post by Alistair McLeod the other day on X. I know you had Alistair on, really smart guy. And he said, he made a comment about trying to use technical analysis in like the Weimar hyperinflation, which is a very good question to ask. So that's why we don't just look at price and volume alone. I like to say the dollar is obviously an ever-changing unit of account. So if you're just measuring things in dollars, which is changing, kind of what good is the measuring stick? Well, that's why I use ratio charts. Ratio charts are a key part of my analysis because what does that do? It removes the dollar from the equation. Gold versus real estate, gold versus the stock market, silver versus gold versus other assets is kind of a key part of my analysis to remove that. But to answer your question, yes, your point is valid. But at the same time, a lot of these, like price and volume, create like a memory, especially in this day and age of trading algorithms. And like in those trading algorithms, they see the price, and that price matters. The computer algorithm doesn't necessarily adjust for inflation. So these institutional trading algorithms, they're trading around the previous levels, and they're not adjusting for inflation. So they matter, but you do also have to consider inflation. So hopefully that kind of answers that question.
Definitely. And it seems like your perspective is at the moment is that the most probable outcome is we kind of stay range bound between this 50 or the 45 and 54 dollar level for a little while we consolidate. I did want to ask you about kind of what is maybe the best case or worst case scenario. I know some people are,
Yep.
and I've seen this as well, obviously, that we had that those two tops, right, in silver. And if this confirmed as a double top pattern, we could see silver significantly lower. So, what is your outlook, and kind of how do you rank those probabilities for those different outcomes?
Yeah, love this question. And this falls right into my sweet spot where strategy is greater than predictions. So I like to look at the range of plausible outcomes. Now there's an infinite number of outcomes, right? But the ones that are actually plausible. So the most extreme on the bullish side would be we punch through, this all-time high 54 and change and go, to 96 over the next few months. That to me is very unlikely, but it's within the spectrum of plausible possibilities. Now, on the other end of the extreme, this would be the bearish plausible outcome, is that we did see a double top. So a double top, we were just talking about this before hitting the record button. We came up and tapped that all-time high resistance this week, and then we fell back down. So there's a double top there. Now, what confirms the double top? Well, the bottom of the range, the most recent swing low was 45.50. That was just a couple weeks ago, 45.50 something in silver. So if you break below 45.50, that would confirm that it was indeed a double top. And then you get a measured move target on the downside. So how would you get that measured move? Let's just call it, for round numbers, 54 was the peak, 45.50 was the bottom. So you take the difference there. So what's that? What I say, 45 and 54, let's just call it $8. So you would take $8 and subtract that from 45. That gets you down to about 47 and change. So to me, 37 and change, 37. So to me, that's kind of like the most bearish outcome, 37 on the downside, and then straight to 96 on the upside. So the key is keeping those in mind. I think it's F. Scott Fitzgerald who had this famous quote. It's the sign of a first-rate intelligence to keep two opposing viewpoints in mind at the same time and still retain the ability to think. So having both of those viewpoints in mind, assigning probabilities to each, and then setting yourself up, having a strategy that allows you to be profitable if either one of those things come to fruition. So to me, I've got my core holdings. I'm not touching it. If we go straight to 100, hey, I'm happy. Good. We pull back to 37. Good. I've got cash available. So I'm happy either way. I sleep well at night. So I think that's really the key, rather than focusing on exactly what's going to happen, a strategy so that you can prosper regardless.
And it sounds like then your time where you probably buy back in a little would be the lower end of that range at around 45.
Yeah, for me, any dips towards 45, I think are fantastic buying opportunities, while keeping a little bit just in case if we go back below 45, 45.50. I'm going to keep some available to scoop up like absolute bargains at 37. I don't think that's going to happen, but it's within the spectrum possibilities. So keeping some cash available. Now, you might say, what would cause it to go to 37? I don't know. Trying to predict catalysts is always hard, but some kind of panic, deflationary impulse is always a risk. And I think the risk of that happening sometime soon is a heightened risk of that happening. We're talking about, stress in the credit markets, credit spreads kind of blown out a little bit, the repo market this is outside of my realm of expertise, but I know these things are happening right now. And when I look at the long-term chart for the dollar, even the short-term chart for the dollar, it's testing on the long-term chart, the lower rail of support. So a surprise dollar bounce would catch everyone off guard. What could cause that? I don't know. Some kind of panic. You never know what's going to cause the panic, but it could be something that comes out of nowhere, some bank failure, who knows? If that were to happen, that could send everything down really quick. That's where, you might see $37 silver. And man, would that be an opportunity? I'm happy if that happens. And I'm happy if we go to 100. Just it's important to not just be 100% bullish, dogmatic. We're going to $100 silver next week, next month. Think about all the different outcomes and set yourself up, because I don't want to see people get hurt. I've been there. I remember when I first came into these markets, 2006, 7. I was caught off guard by 2008. I was always 100% in, no cash available, and these gut-wrenching pullbacks, man, were they hard. And human nature is to sell at the worst possible time.
Now, when it comes to gold, what do you see on that chart? It seems like we kind of did see a double top there, and we sold off, all the way down below 3,900, bouncing back in the last few days. What is your outlook for gold here?
Yeah, so gold of our focus sectors, silver, uranium, gold, and platinum. I love gold. I'm very bullish on gold. I think we're going to $15,000 an ounce is my long-term target. But like right here, right now, it's just of those focus sectors, silver, uranium, gold, platinum, it's the one that I'm the least excited about. We're up in extreme overbought. The RSI has never been this high. Of course, there's no overhead resistance because we're near all-time highs, except for this peak at 43.98. So just like I think silver, we're likely to remain range-bound for a little bit. I think gold is similar. But if I were looking to put new money to work, I'm looking in silver, uranium, and even platinum over gold right now. For gold right now, I'm content to just hold. Now, some of the mining stocks actually, though, interesting. The metals are up near all-time highs, but some of the mining stocks are just beaten down. Like I won't name names, but like there's one we just bought this week. It's down 40% from its high from last month in October. And silver is right up near its all-time high. So is gold. So some of these mining stocks, although there's more downside risk there remains downside risk in the metals. Some of the mining stocks are still looking pretty attractive here. Doesn't mean they can't go lower, but I'm considering just nibbling a little bit here at some of these mining stocks, including gold mining stocks.
Now, for those, I mean, maybe a bit more heavily in gold, would you think that it might be a good idea to consider swapping into silver at this point? We're still seeing a ratio of about 80 to 1 right now, which is historically high.
You could consider that if you were like, look, it's hard to give that kind of advice, but like, let's just say you're someone who's 100% silver and zero gold. Well, maybe that might make sense for you. But if you've already got somewhat of a balanced, to me, I do like to do that at extremes. And I'll pull up a chart here. Let me just go to the log scale. Back in April, during the tariff tantrum, when gold was up and everything else was down, silver got down to 27.50. I swapped all of my gold that I have in storage for silver and platinum up here. So can you do it right down here? I wouldn't, because looking at this chart, we're kind of at support. I mean, we're at a place here, just looking at this chart alone, where perhaps, gold could bounce a little bit and outperform silver on this ratio. I mean, you can see this clear channel on the gold silver ratio. So silver has been outperforming gold. You can see a period here where gold outperforms silver just for a period. So I would maybe wait if I were going to do that. But it's an individual case by case basis. I will tell you that I'm like 95+% silver over gold in my physical holdings. I'm going to start gradually swapping some of my silver back for gold, a little bit of it, just to have increased exposure. And where I'm going to do that, I'll just tell you, is one at the lower rail of the support. We're not quite there yet, this dotted green line. The next one would be at the silver squeeze low down at 62 to 1. That's where I'll swap just a little bit of silver back for gold. Do it again here at this 30 to 1 ratio from 2011. And then when we start getting down to 15, below 20 to 1, that's where I'll begin swapping, more silver for gold a little bit more aggressively. But, to me, silver has much more upside than gold at this juncture.
Well, I think it's really good to have you on. I mean, to really discuss how in these wild markets, prices going up and down, it's good to have a plan, right? And not, again, be kind of just doing things on a whim, being emotional, being impacted by the wild prices. So any last thoughts before we let you go, Steve? And yeah, just once again, thank you so much for taking the time today.
Yeah, I would just say one of my favorite sayings too is whenever you push the buy button, have a subsequent plan of when you're going to push the sell button. Now you can adapt and change your plan, but just to even have one, because it is going to be really hard. I've read a handful of books. It's called Second Chance by David Morgan and David H. Smith, who passed away a year or two ago. Fantastic book, and they go through your profit taking strategy. That's one section of the book, and they talk about in the 1970s bull market. There were all these, newsletter writers and people who correctly understood debt-based fiat currency, monetary currency debasement, and that silver and gold were the answer to that. And hardly anyone took profits on those big runs. And then what happened? Silver went to 50, and here we are. It took till 2011 to get back there. So you got to have a plan to push the sell button and acknowledge that you're never going to time the exact top or bottom. So scaling in, scaling out a little bit, just having a plan. Is going to set you apart. It's true that 95% of traders lose money. That is true, but it's also because 95% of traders don't have a plan. So if you just have a plan, have a trading plan, have an exit strategy, it's going to set you apart from the vast majority of other kind of retail speculators and traders out there.
Fantastic. Once again, Steve, thank you so much for your time today. Silverchartist.com is the website. Can you tell us a bit about that?
Sure. Yeah. Silvercharts.com. Awesome community, over the shoulder service, real time alerts. You see exactly what I own, screenshots of my portfolio. I don't claim to get everything perfect, but you do see it a fully transparent manner. And hopefully, the goal is that helps our members to make better trading and investing decisions in their own accounts. And our goal is time freedom to pursue life's higher callings, things of eternal significance. We all have a calling in this life. And for most of us, it's not to sit here and watch these markets all day long. We've got things that God put us on this earth to do. And what can money do? It can buy your time back to go achieve those things that you're called to in life. So that's kind of our motto.
Fantastic. Steve, once again, thank you so much for your time and God bless.
Thanks, brother. Appreciate you.
Perfect. Yeah. Well, thank you so much for your time, Steve.
Sweet. Yeah, I feel good about